Okay, today is December 9th, XRP market review. First of all, I'm a futures trader, preferably NASDAQ 100. But a couple months ago, my brother put me on to this whole XRP wave. And since watching price and keeping up with this whole XRP community, it's making me cringe watching all these speculators speak on price delivery without knowing what they're talking about. So first of all, if you hear any of these speculators talking about support and resistance or drawing trend lines or using indicators, thumbs down, unsubscribe. Tonight, I'm gonna break down how to read price without indicators, without trend lines, without using the term support and resistance. If you're using the term support and resistance instead of buy side liquidity and sell side liquidity, you're doing it wrong. All right. I don't care what asset class you're using. Price is algorithmically driven. All right. There's algorithmic delivery. I don't care if BlackRock drops $9 trillion today. It's still gonna run sell side liquidity before we see higher prices. And I'm gonna show y'all what I mean tonight. All right. So, like I said, you have what's called buy side liquidity, which is the high side, and you have sell side liquidity, which is the low side. Okay. So, whether if you believe it or not, every asset class is algorithmically driven. All right. We have electronic trading. All right. We have computers. These financial markets, these asset classes, all right, they're algorithmically driven. What they do is they engineer liquidity and then they run on that liquidity. Okay. So they engineer liquidity, highs and lows, and then they run on that liquidity. Okay. And certain price levels that the algorithm refers to are inefficiencies. Okay. So you see how all these candles intersect one another because there's buy side delivery and then we see sell side delivery and buy side delivery and sell side delivery. This is a balanced price range. Okay. So when you see big candles, this one candle stopped right here. The two candle rallied all the way up here. This third candle didn't come back down into this price range. Okay. So before prices can move higher, it's going to run back to this inefficiency right here. This is a buy side imbalance, sell side inefficiency. It was inefficient in offering sell side delivery. Okay. So it's going to engineer liquidity. Okay. And then it's going to run on that liquidity. This is sell side liquidity, meaning that retail traders, okay, they, as prices moving higher, they're moving their stop loss. They're dragging their stop loss higher. Okay. So I don't care if you're an investor or a trader, I'm going to show you where to enter your trades at. I'm going to show you the liquidity. I'm going to show you the inefficiencies that the algorithm is going to refer back to. Okay. So what happens is we engineered. Why did price right here? Why did it not come back down to this price level? It's not buying and selling pressure that moves the market. The algorithm controls the market. The algorithm is the one manipulating price. Okay. So why did this not come all the way back down here? It left this gap open for a reason. Okay. So after engineering all this liquidity, all it did was run sell side liquidity by running into this inefficiency. And once we have, look, right there, it didn't even hit 50% of it. And after we hit this inefficiency right here, we can run to the buy side liquidity. Okay. And it did that right here. So the way the manipulation works is retail traders who were talking about support and resistance and drawing trend lines and shit like that, they want to be breakout artists. Okay? They want to be breakout artists. So the first form, the if price breaks this level of support, I'm gonna sell. And where are they gonna put their stop loss? They're gonna put their stop loss right here, right? Or when price breaks this level of support, they're going to put their stop. I don't know where they're going to put their stop loss, but they're looking for a breakout. They're looking to buy at support and sell at resistance, or they're looking to sell when price breaks lows, or buy when price breaks highs. Or I caught my brother saying, if price breaks this high right here, then I'm going to buy. Well, guess what? You're 70% too late. You missed the wave. You missed the train. On top of all it did was engage buy side liquidity, and then it ran on that liquidity. Then it ran the sell side liquidity. You see what I'm saying? So one way to know when to enter a trade from this low to this high, the blue line is 50%. Below 50% is a discount. Above 50% is a premium. You don't want to buy at a premium. You want to buy at a discount. Okay? So when price had this dealing range right here, price came down into a discount. 0.618, which is the Fibonacci sequence, to 70, from 61.8% to 70% off. This is where you want to buy. So the example that I give is if you have a t-shirt company, all right, all in, for that market, based off the quality of that t-shirt, the most you can sell that t-shirt for is $10. Okay? So you don't want to be all in buying these t-shirts with your name on it for $7 and selling them for $10. That's not a good business model. That's not a good trade model. What you'd rather do is buy them at 60% off, which is $4, or 70% off, which is $3. You want to be all in at 60 to 70% off. You see what I'm saying? Buying them at $4 or $3 and selling them for $10. That's a better business model. That's what institutions want to see. They want to buy at a discount. So price engineered these lows, and it ran those lows and came into this 60 to 70% discount by running into this buy side imbalance, sell side inefficiency, aka a fair value gap. Because what it does is it creates this market range, all right, and then it runs down into this fair value gap, offering buyers an opportunity to get into the market at a fair value. It ran sell side liquidity, and then it ran for the buy side liquidity. Okay, so there's one example. And then when price made this crazy down move that everybody was scared of, I like to see that, because now that we ran the sell side liquidity, we can run to the buy side. So what happens is all these candles are intersecting each other, and then we rally higher and leave this fair value gap. Okay, now from this low to this high, we have a fair value gap right here, right at 50%. Like I said, you want to buy at a discount. So I think it's no coincidence that price came exactly to 50% before it rallied higher. Then from this high to this low, get it right. Now we have this as our range, okay? What did price do? Pulled all the way back to 60 to 70% off, like it's supposed to, because the algorithm runs the market. I don't care if BlackRock drops $9 trillion in this market. It's still gonna offer algorithmic. It's still gonna offer algorithmic delivery. It runs exactly to 60 to 70% off into this order block. We don't have time to talk about what an order block is today, but it runs exactly to that order block. This is another 1 minute fair value gap right here. From the low of this candle to the high of this candle. This is a sell side imbalance, buy side inefficiency. Price sold off. It never came back into, it never offered buy side delivery in this fair value gap. So I'm going to show you how the algorithm is going to refer back to this price level right here. One time, two times, where we at with 5. There we go. 3 times. This is no coincidence. The algorithm came back and referred to this price level. Exactly. All it had to do was engage that price level for us to see lower prices. That's all it had to do. So now, what was that real sexy one at? What day was that? When everybody was scared out their mind. So we filled in this inefficiency right here. You see how price is respecting 50% of this buy side imbalance, and then we see higher prices. This is the exact level that price is going to refer back to before it sends prices higher. So now that we have these relative equal lows right here, on top of these lows right here, I want to see, as an XRP holder, look at that. All it had to do was engage this sell side liquidity by filling in the rest of this inefficiency. See, price only came down to roughly 50% of it. You see how it left this range open? It didn't fill in all of this inefficiency. It left it open on purpose, the same way it left this inefficiency on purpose, and then ran this sell side liquidity by running into this inefficiency, and then it ran this buy side liquidity. That's the exact same thing that I wanted to see happen on Wednesday. See, we ran the sell side liquidity, filled in the rest of this gap, and look how price respected this price level. We went down into it, but we still closed inside of this area because it's respecting this fair value gap. 2 times. And then what? We see higher prices. Higher prices. See how it came back into this fair value gap? But then once we close above it, now we know that this fair value gap is going to act as support. These are the real support and resistance levels. Fair value gaps. Not no damn swing highs and swing lows. I have this level of support, these levels of support mapped out before they even go to them. Look at it. Right there. It's already mapped out. They already showed me the resistance level. It's this sell side imbalance, buy side inefficiency. It ran right up into it, into this white up close candle, this order block, and respected 50%. From this candle's low to this candle's high. Came right up to it and stopped on the dime at 50% of that order block. So then from this high to this low, once again, it pulled back to 60 to 70% of a discount before we see, well, I guess this would be a premium. You want to sell in a premium and buy at a discount. So it pulled back above 50%, which is premium, into 60 to 70% of this down range from this high to this low. It pulled back 60%. And then we see lower prices. So today, I called it. I said, we're going to see 206. Matter of fact, damn, that bitch won't focus. It's not going to focus. Right there, that small little bubble, it says 206. We ran to this fair value gap. Guess I had it on 15 minutes. There we go. I wanted to see price run. See, look, we ran this sell side liquidity and then we engineered more liquidity. All we did today was run these three lows. All we did was run these lows by running into this inefficiency. Now we can see higher prices. We can see higher prices now because the damage has been done. We filled in majority of this inefficiency right here. And I want to see some of it left open. That means we're bullish. We didn't breach this buy side imbalance. We didn't breach this fair value gap. We wicked it and then moved higher. Now look. This is minor. So now we have this is buy side liquidity. I mean, sell side liquidity. And this low would be minor sell side liquidity. So I don't want to see this low breached. This one's okay because they engineered these low, this low and this low. Price could, look, they can do whatever the hell they want to do. If they want to send prices to goddamn $10 today, they can push the button. That's called manual intervention. They can just push the button and send price to $10 right now if they want to. But they're going to engineer liquidity. And then they're going to run on that liquidity. So now that we've breached this sell side liquidity right here and ran into this inefficiency the same way we ran this sell side liquidity by running into this inefficiency, and then we took out buy side liquidity. Now we have these relative equal highs right here. These two highs, this high and this high. This is buy side liquidity right here. Not no damn resistance. This is buy side liquidity. This ain't support. This is sell side liquidity. Everybody who bought right here, they have their stop loss at these lows right here. So it's purposely going to run those lows and refer back to this price level. And then we can run this buy side liquidity now. So by tomorrow or the day after, we're going to be right back at 2.69 because the damage has been done. We ran sell side liquidity by running into this inefficiency. So then, now that we're at a key price level, we can drop down into a 1 minute, a 15-second, because the same PD arrays are going to exist on lower time frames. From this low to this high, right before this drop, what did it do? It came back exactly to 50% because it's algorithmic, it's electric. Do y'all see any trend lines on my shit? Do y'all see any indicators on my chart? Do y'all see any EMAs? Do y'all see any stochastics? Any MACDs? Do y'all see any indicators? You don't see nothing. You see real price action. This is how price is algorithmically driven. It came exactly back to 50%. Exactly. So now that we've ran this minor sell side liquidity, we can at least target these highs right here. I want to see price with speed. Now look, from this low to this high, let me get it right. Do you see that? It came in tapped 0.618. The Fibonacci sequence, because price is electric. It's not buying and selling pressure that moves the market. It's a goddamn computer that moves the market. And it engineers liquidity. These lows right here, it ran those lows and came exactly back to 0.618, 60% off of this dealing range, of this market range. It pulled back into a discount, offering buyers the opportunity to buy at a discount before sending prices higher. I can see, I know it's about to go higher because it already did the damage. It ran these lows where you, the retail trader, as prices going up, you're moving your stop loss to every low, and it purposely runs those lows. It could have went straight from here, straight up there in 2 minutes. We already seen that price could just drop like it want to. It dropped right into this fair value gap and stopped. So it could have ran straight on up there, but it engineered these lows on purpose. So you, the retail trader, can drag your stop loss up every time price creates a low. You want to drag your stop loss up because you look at it as support. But little do you know that price, the algorithm is referring to these bolts, these two lows right here. That's minor sell side liquidity. And it ran that minor side sell side liquidity. And now we can see higher prices. Because this is where you put your stop loss in. So price is going to run those stops, those sell stops. Price is going to run those sell stops and then send prices higher. So we run the minor sell side. We ran the minor sell side and we broke this high right here. As soon as we break this high, these down close candles, that's an order block. The open of this down close candle, we breach that on this candle. And then price comes back down into this price range of this sequence of down close candles. And it sends prices higher. Because what happens is, once we take out minor sell side liquidity, here's the low. We engineered this low. The algorithm engineered this low. It engineered this high right here. And then we ran this low. Now everybody knows that when you're in a sell program, when you're bearish, we shouldn't be breaking no highs. That's common retail knowledge, right? The algorithm is running on script. It's running on code. Like I've been showing you, it'll pull back to exactly 50%. It'll pull back to exactly 60 to 70% off. You know we've entered a buy program when we engineer a low and we engineer swing highs and we break that low and then we break that high. When that happens, we are instantly in a buy program. So any PD array that I've showed you, a order block or a fair value gap, as long as you're below 50% of this range, every PD array should work. It should just work. They're not going to fail until you pass 50%. Now look, as soon as it passed 50%, it dropped. Of this total dealing range, of this total range right here, there is 50%. Every time we hit a down close candle, it's going to send prices higher. So here's that down close candle. We broke above it. We came back down into it, and it sent prices higher. Left this buy side imbalance, sell side inefficiency, went higher, came right back to it. Exactly right back to it. And then rallies higher. Now we have these two down close candles. Price went above it, and it came right back down into it. Came right back down into it. And then we have this down close candle. This down close price went above it, and what did it do? Came right back down into it, and that sent prices higher. And then we have this down close candle. We went above it, and then we came right back down. It don't get no better than that. You telling me that all the buyers in the market right here decided to buy exactly at this price level? No, it's electric. It's electric. It's algorithmic. The algorithm is referring back to these price levels. This price level. It engaged this order block and sent prices higher. So we're going to see buy side delivery until we engage buy side liquidity. Because we're in a buy program. The same way, if I double click one of these and it's going to open that program, we're in a buy program. The script, the command is we broke a low, engineered a high, and broke that high. And we came back down into the order block and rallied higher. Order block and fair value gap and rallied higher. So it doesn't matter what time frame you're looking at. I just broke it down on a 15-second chart. I broke it down on a 15-second chart, on a 1-minute chart. Either way it goes, it's the same algorithmic delivery, and it's going to keep doing that, and it doesn't stop. So now we went to 50%, and then you look at this range from this low to this high, and it pulled back exactly back to that fair value gap that it purposely left at 60 to 70% off, and it tapped that shit and sent prices higher. And now we can expand higher. So this is not an XRP crash. This is running sell side liquidity. That's all it did, y'all. Do not panic about price drop, making this extreme drop, especially from yesterday at 310. All we did right here was tap this fair value gap, and it sent prices lower. And then from this high to this low, where did we go? 60 to 70%. You see how price respected that 70% level? It whipped above it, but it still closed inside of this 60 to 70% discount for a seller. This is a premium. You want to sell in a premium. And what did it do? So we with the fair value gap, we with this inefficiency, it sent prices lower. We had accumulation right here. And then this is the manipulation. All right. Because y'all are saying, oh, if price breaks this high, then I'm gonna buy. All it did was break these highs to trigger your buy order. And then it ran your stops. You either got your stop loss right here at this low or right here at this low. And it purposely left these lows right here for you to put your stop loss right there so it can come up into this PD array and then drop and run your stop loss and take your money. And it ran for the sell side liquidity by running in to this inefficiency. It's doing the same exact thing every single time. We engineered this sell side liquidity. We ran that sell side liquidity by running into this inefficiency, and then we ran the buy side. And then we dropped low like a motherfucker and went exactly right back to this fair value gap, wicked it. And then from there, we see higher prices. Back into this inefficiency in this order block. Back down to this inefficiency. See, now, when they're talking about we're ranging, we're chopping, it's because we're chopping between two different PD arrays. So it has to balance this price range. It's not going to leave any more inefficiencies. It's offering buy side, sell side, 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 delivery. And now that this price range has been equally balanced on the buy side and the sell side all the way up, now we can drop low and we can hunt the sell side liquidity. So now we have a balanced price range up here, a balanced price range here. But when we drop, we left this inefficiency right here, this sell side imbalance, buy side inefficiency right here. This is just sell side delivery. So once we balanced everything below that, we ran right back on up into it. This is just sell side delivery. We had to offer some form of buy side delivery up into this range before we can take out this sell side liquidity. And it takes out that sell side liquidity. This is not an XRP crash. All they did was engage this sell side liquidity by running into this inefficiency. And now we can see higher prices, at least to the 2.69 level where we have new buy side liquidity resting. Everybody who's been selling in this market, they have their stop, the big fish. I'm not talking about retail Rick. I'm not talking about him. He's trailing his stop loss as it goes. On this price leg, all these highs right here, I guarantee you retail Rick is dragging his stop loss as price is dropping, and it purposely ran those stops. And then it drops. We took out these three lows. I guarantee, tell me I'm lying. If you watching this video, give me a thumbs up. If on Wednesday, Thursday, and Friday, if you were involved in this price run, you got your stop loss below these two lows right here. The algorithm knows you got your stop loss below these lows right here. And it purposely ran those lows. It purposely left this inefficiency right here. It purposely didn't come all the way down here on purpose. And it purposely engineered this liquidity so it can run on that liquidity by running in to this inefficiency. And now we can see higher prices. So look at this. Fair value gap. Ran to it one time on top of this order block. This one down close candle on the 1 minute. Wicked. Sent prices higher. So the next time it comes down into this fair value gap at order block, wicked higher prices. So I hope this video showed you how to navigate any asset class. I don't care what asset class it is. Bitcoin. This sequence of down closed candles. Engaged. Let's get on the 5 minute. From this candle's high to this candle's low, that's a 5 minute fair value gap. Wicked. Price shouldn't go below this candle right here. Price shouldn't go below this candle because the algorithm won't let it do it. It won't let it go below this candle right here. All it did was come to see about this inefficiency and this 1 minute order block. See this 1 minute order block. This sequence of down closed candles. Last time we came down into this price level, it sent prices higher. So the next time we come in to this price level, this price range right here, is going to send prices higher. I'm not saying it's going to the moon from it, but that's algorithmically driven right there. This is not no random shit. It's not buying and selling pressure that moves the market. The algorithm drives the market and it engineers liquidity. These two relative equal lows. And it runs on that liquidity. It went all the way up here. All the way up here. And then dropped down to engage this sell side liquidity. I mean, I could keep going on. You're just going to hear me say the same thing over and over again. Not once did you hear me say nothing about no damn indicator. Not once did you hear me say anything about no support and resistance. Not once did you hear me or see me draw no damn trend line, looking for a breakout of a trend line or anything like that. I'm showing you the liquidity. Liquidity is the lifeblood of the market. Somebody, in order for me to make money, somebody has to lose money. That's the lifeblood of the market. The algorithm is going to engineer liquidity and then run on that liquidity. And as soon as it runs on that liquidity, if it's running sell side liquidity, I'm ready to buy. I'm looking for a reversal pattern. As soon as we run that sell side liquidity, I'm looking for a buy program. I'm looking for the algorithm to show me a buy program. As soon as we run buy side liquidity, this high, where everybody's thinking, if price breaks this resistance, I'm going to buy. Why would you do that? Why would you do that? Why would you miss the whole move? You missed the whole move. I had a buy order at the top of this fair value gap. I had a buy order overnight. I went to sleep at like 12 o'clock and it's like, you know what? I'm tired. I'm going to miss the move. Let me go ahead and just put I know they're going to run sell side liquidity by running in to this inefficiency. So I had a buy order right here and went to sleep, targeting the low of this inefficiency right here. And I wake up in profit. I'm not expecting price to run any higher now that we took sell side liquidity. I'm just expecting it to run buy side liquidity. So look, from this low to this high, 60 to 70%. My order was at the high of this fair value gap. I'm buying right here. So if you're trying to buy because price is about to break this resistance and you buying because it broke this resistance, you literally missed over 70% of the move. You missed 70% of the move with your retail logic. If you get rid of the support and resistance retail concepts and you adopt liquidity and you understand that they're just running the sell side liquidity to run to the buy side liquidity, you'll be profitable. I guarantee you'll wind up profitable. Now you know algorithmic delivery. If you like this video, thumbs up, subscribe, or whatever. I don't even really do. This is my first time ever dropping a YouTube video, doing a market review. The only reason why I'm doing this market review is because watching these XRP speculators speak on the market, it makes me cringe. It makes me cringe listening to y'all. I just want news updates to know about how Donald Trump feels about XRP and you know what I mean, the news of it. I don't want to hear y'all talking about no support and resistance and drawing trend lines and breakout patterns and EMAs. If you looking at an EMA 50 and an EMA 200, it's calculating old data. It's literally calculating old data. Old data doesn't drive the market. Liquidity drives the market. Liquidity is the lifeblood of the market. Price is either running to liquidity or inefficiency. It's engineering liquidity, leaving inefficiencies, and then running on that liquidity by running into that inefficiency. It don't care about no trend line. It don't care about old data. That old data isn't moving the market. That old data is not moving the market. That is not the next draw on liquidity based off of two motherfucking squiggly lines crossing. Take that shit off your chart. If you got that shit on your chart, X that shit off your chart. If you watching somebody who got that shit on their chart, comment and tell them, take that shit off your chart. If you're trying to get any type of updates on what the market is doing, and you watching somebody who got squiggly lines on their chart that's calculating old data, unsubscribe. I hope y'all found this video insightful. If you liked the video, give me a thumbs up to let me know that you learned something. Hopefully I blew your mind, showing y'all algorithmic delivery. You take a total market range. It could even be a small one. It could even be discount from this low to this high, pull below 50%. From this low to this high, right in the sweet spot, 60 to 70% off. From this low to this high, right in the sweet spot, 60% off, 70% off, because price is going to pull back into a discount to allow you to get into the marketplace at a fair value. This is a fair value gap. That's why it's called a fair value gap. From this high to this low, price only offered buy side delivery. It didn't offer sell side delivery in this candle. So before we go, we maxed out right here. Before we go any higher, we're going to come and see about that fair value gap at a discount, offering buyers an opportunity to get into the marketplace at a fair value. That's why it's called a fair value gap at a discount. So I hope y'all learned something in this video. Any speculators who speculating on any market, any asset class, I hope y'all learned something. I hope y'all take them damn trend lines off y'all chart. I hope y'all take them EMAs and any other indicator off your chart. You don't need it. It's a distraction. You're using old data. It's literally calculating old data. Why do you think old data is going to drive the market? That's not the next draw. The next draw on liquidity is these relative equal highs. These two relative equal highs right here, I want to see price take out these three highs right here. Y'all are looking at this as resistance. I want to see price engage this liquidity. We just took out sell side liquidity. These three lows took it out by running into this inefficiency. Now I want to see price take out this buy side liquidity. Hopefully we can make it back up to this inefficiency. It only sounds right. But one more time, hope y'all found this video insightful. Like, subscribe, whatever. This YouTube page is really, I keep it private for my trading journal. I do a market review every day. just to drive I don't know how many times in this video I said it runs liquidity by running into an inefficiency. You got to train your mind to see this. You got to get the muscle memory to see this algorithmic delivery. So my YouTube page is honestly, I use it as my trading journal. And I'm gonna make this video public so that these XRP speculators, I'm gonna tag, I ain't gonna tag nobody, but I'm gonna leave some hashtags and shit. Hopefully this gets into the YouTube algorithm and somebody can learn something and learn how to make some money in any asset class. It's gonna do this in any asset class. I don't even want to pull up my NAS. Let me pull up my NAS. Let me get off of here. I'll drop another video sometime this week. Hopefully y'all found this insightful. Till next time, peace.